These analysts are so bad at their jobs, it's embarrassing.
Hey, I'm Steven and this is Solving the Money Problem. If you're new, welcome. If you're not, welcome back. So in this video, we're watching a few clips of Ross Gerber discussing Tesla's stock price, Tesla's stock split, and plenty more. So let's see what he had to say. But first, hey guys, if you're in the US and you'd like up to 2 free stocks, check out the link in the description to WeBull. If you open a new account and fund it with $100, you get 2 free stocks, one of them valued up to $1,400. And if you're in Australia, the UK, or New Zealand, you can get a free stock with stake using the link in the description. Let's get back to it.
Tesla shares hitting a new high in the session today. That stock is up about 4% today, but up more than 20% this week and up about 50% since the stock split was announced. Let's bring in Ross Gerber from Gerber Kawasaki Wealth and Investment Management. Ross, how do we explain these moves? Is it really all about the stock split? Is it about the battery day? Why have we seen such big gains in the stock?
Well, I think we're seeing a confluence or almost like the perfect storm of things that make a stock go up, from rampant speculation with individual investors who have made Tesla kind of a cult name. Secondly, the company's executing brilliantly right now. So, their earnings report really started this rally where they proved that even despite the pandemic, they could make money and grow the business. I mean, that's incredible operational success.
I agree with Ross here. There's a confluence of factors that are contributing to the move in Tesla's stock price. But let's just take a moment here to appreciate what Tesla did. In the midst of a global pandemic with forced factory shutdowns, they reported their 4th consecutive quarterly profit and are now eligible for S&P 500 inclusion. I mean, I'm never going to get over what an amazing achievement this was. So bravo to Tesla. Well done, guys.
Followed by battery day. So I do think part of this has to do with battery day. In a month, Tesla's going to announce what I think will be just groundbreaking technology, bringing up the capacity of batteries by some sort of multiple, maybe 10x, that would really change the game for not only solar power, but for the cars too. And so, the stock split is a symbolic thing that I push Tesla and Apple to do, because I think it's great to have individual investors who can afford the stock. But I think because it's so rare, investors took it to be a much more positive symbol than it really is, because it's become so rare for companies to do. So they really have a perfect storm right now of everything going right. And if you go back a year ago where everything was going wrong, I can tell you it's been a long year, but I'm pretty happy to be making money.
Just on the topic of battery day, guys, I have actually made a video with battery day predictions, so check that out if you haven't already. But Tesla last night actually updated their website and made a new page in the lead up to battery day. This background has me very intrigued. I have zero question that this image is something to do with battery technology. My guess is we're looking at a microscopic image that's had a little bit of a bitmap filter applied to it. If anyone watching has any ideas, crazy theories, anything at all, let me know. What might this be? Silicon nanotubes, close-up of a metal in the... I don't know. Let me know, guys. There's something here. Someone might figure it out before battery day, so let me know.
To your point, the stock split didn't really change the company materially in any way. Right. But it certainly lifted the sentiment around the company. I want to talk about battery day, because it seems like when you look at all the bullish calls, the bullish notes that have come out over the last several weeks, it is really about Tesla and the potential to own the entire stack when it comes to EVs. I mean, how realistic is this when you're talking about the potential in the medium term? They're certainly going to have to ramp up production in the same way they've had to ramp up production with cars. I mean, help us understand what the potential is here and what we're expected to hear on battery day.
So battery day is just one step in the technological innovation that Tesla's focused on, because the second part of that is full self-driving too. So as much as I'm excited about battery day, simultaneously, we're getting very close to full self-driving, which is really the margin driver for Tesla, is the software. But I think there's a viewpoint change in Tesla as a technology company, which it always has been, from an auto company that many of the short-sighted analysts had considered it. And so now it's being valued like a tech company.
Isn't it so refreshing to hear the mainstream finance media now starting to cotton on to the idea that yes, Tesla will be a dominant player in the battery supply business? It's just wonderful. I mean, look, it did take them a while to figure it out. I get that, but hey, better late than never. And Ross is completely right. Finally, analysts and many investors in the wider marketplace are starting to realize that yes, Tesla is actually a tech company, has been from day one, but it's great that they've finally figured this out. Once again, better late than never.
But I think the thing that makes Tesla so unique as a company is exactly what you said earlier about dominating a field where most car companies chose to placate the market with kind of weak entrants to compete with Tesla that weren't that good, to many companies just being light years behind, and many organizations, even the biggest ones, ill-suited for the change in the industry. So when you look at companies like Volkswagen or Toyota, they're just not set for the EV era. They're not close to it. And that's what I think Tesla is doing, not by their design, but because so many people resisted the change away from oil that they fought Tesla, tried to bankrupt Tesla versus just went all in a couple of years ago and just accepted that's the future.
I've said it before and I'll say it again. Most legacy automakers are f***ed. They're going bankrupt. Here's the outcomes. They either go bankrupt, get acquired or merge with other companies into some gigantic conglomerate that's going to try and crawl into the electric future and maybe survive, or they'll spin out an EV startup with the intent of putting themselves out of business. Mark my words, half a decade or so and they're going to be dropping like flies.
And now because of the pandemic, every company in the world has to accept the digital era is that's our world. And we're going to see massive disruption over the next year or two. And Tesla's an example of this. Netflix is an example of this, and many other companies that are booming right now because of the forcing of digital adoption. And Tesla's the only way you can buy a car on your phone and pick it up without a person is a Tesla.
I just want to pause here for a moment and point something out. I feel like there's going to be some people who feel like Tesla are just lucky. They're lucky they didn't have a dealership network. They're lucky they allow customers to order online. No, they're not lucky. They're smart because they did things better. There's not one person on earth, unless you're a masochist, who enjoys going to buy a new car. It's a f***ing pain in the ass. You don't even know the price you're going to end up paying for the vehicle. Tesla has trimmed the fat. They've taken out all the bullshit. They've made it a more enjoyable, seamless, faster and efficient process for everyone involved, Tesla and the customer. That's why they're winning during this pandemic.
That viewpoint change you talked about, I mean, what should Tesla be valued on right now? Is it a car company? Is it an energy company? I mean, it's $2,082 a share. Where's the value?
I mean, Tesla people don't like when I get into this because now I have the lowest price target on the street. You know, these analysts are so bad at their jobs. It's embarrassing.
Now, I think what Ross is getting at here is these Muppets on Wall Street have completely missed the mark on Tesla. They've been way under on their price targets for many years. Suddenly, the stock's gone to the moon, and now they're reverse engineering, trying to backwards rationalize a new price target with a 2 in front of it or a very high 1000s. Not because their investment thesis around Tesla has changed fundamentally, but because the stock price has gone up, and they're so wrong it's embarrassing. So now they're trying to chase after the price target and figure out, okay, well, how can I invent a way that this makes sense to me? It's embarrassing. Ross is right.
So now I have the lowest price target from the highest. You know, so I had one of the higher price targets at 1,000 or 750 when they were all at $10 and $20, and now they're all at $2,000 price targets. But you know, it's hard for. So I see Tesla's runway over the next couple of years as amazing, right? But Tesla has made many mistakes over the years too in this path because they're very aggressive. So to assume that Tesla's runway is just going to be a smooth ride is really ignorant. You know, I mean, this is not an easy thing what they're doing. Global expansion, multiple gigafactories building at the same time, multiple markets, multiple products. This is hard. So we value Tesla closer to 1,000 than to 2,000. And we've been taking profits. And when I get off here, I'm going to take some more profits, you know. And we have a huge position. It's the largest position at my firm is Tesla. So it's been hugely lucrative for our clients. And I'm really stoked about it. But we also have made a fortune. And we have to take some profits here just out of prudent money management. Do I think Tesla will go up for the next decade? Yeah. But I've got to also have a position size that makes sense so I can sleep at night and not worry about Elon crashing his plane or something like that.
To be fair, I can see things from Ross's perspective. When you're managing other people's money, you're an investment advisor, and your biggest position has had such a run, I can understand taking some profits. Totally makes sense. But as a long-term investor, holding the stock for 10 plus years, It's dirt cheap today in my opinion. I truly do not believe that most of Wall Street, most stock investors are factoring in anywhere close to Tesla's future potential in terms of revenue and profitability. Hardly anyone is giving Tesla the credit they deserve for their unassailable full self-driving data lead. They will be first to achieve autonomous vehicles. And when that happens, Tesla will have a double whammy of high margin revenue. Not only will they take a cut from all the fares on their autonomous taxi network, but in addition, what are you going to do when in a vehicle that you no longer need to pay attention to for driving? You're going to use infotainment. You're going to buy apps. You're going to download content, aren't you? And in addition to the battery supply business, which Wall Street's starting to maybe consider a possibility, we have the energy component, which everyone is asleep on. Tesla will be involved in the capture, storage, and distribution of energy globally. Autobidder software, power walls, virtual power plants. Once again, mark my words, they're going to take a huge slice of the global energy market in the future. And yes, I understand that these claims can seem a little bit audacious, too much hyperbole. How can I possibly know what's going to happen in the future? I don't. But I can infer what's likely to happen. And the great thing is, these clips are still going to be online when I'm right. Yeah, I did just say that.
So I think investors need to assess their position and assess their risk tolerance, and they should speak to a financial advisor before they bet their life on Tesla at $2,000 a share in a pandemic with a lot of uncertainty. So this is a great time, and we're very happy about it, but investors should be very cautious.
So, my thoughts on buying Tesla stock over $2,000. Very simple. If you're an investor, which I define as somebody that's holding an asset for at least 10 years, anything less than that, you ain't an investor in my eyes. You're a gambler. Nothing wrong with gambling, but you're playing a different game. So if you intend on holding Tesla stock for more than a decade, and you believe that the trend in the price of the stock is going to go up over time, $2,000 today is going to look very cheap. But of course, a shorter time horizon, anything could happen. You are introducing unnecessary risk. So let me be clear. Today, Tesla stock is expensive. It is pricing in some future success. Nowhere near what actually will occur, in my opinion. But yes, if you've got a short investing time horizon, Tesla stock is expensive today. However, if you've got a long investment time horizon, decade plus, multi-decade, dirt cheap in my opinion.
Yeah, that's a lot of risk taking you just highlighted there. The stock split, you point out it is rare. But we've also seen Apple and that stock see a huge run up since they announced the 4-for-1 split. Does that make you look around and say, well, what are some other companies that could potentially be considering this?
Right. Well, I think there was this ego game between all the tech titans of, I'm not going to split my stock. I'm going to have the highest price stock. Oh, my Google stock is higher than my Amazon stock, right? And I definitely know Jeff Bezos is playing the ego game. So everybody didn't want to split their stock. They want to be like Warren Buffett, you know? And so I think what's happened is that isn't good for individual investors. So I have clients of all size. Let's say I have a client who wants to invest $5,000 with my firm. We do this, okay? And they want to buy Tesla. Well, what do I do when it's $2,000 a share, you know? And so it's like a lot of small investors miss out on being able to invest in these companies because the prices are so high. And even some of the companies are now offering like a half a share. And that's like ridiculous versus just the company splitting their stock. So I think with Apple, they've split their stock pretty consistently every decade or so. So it's not so rare for Apple to split their stock, but they're a leader in the markets and they set a tone. And then, once again, I was pushing Tesla to split their stock because I wanted individual investors to be able to buy the stock easier. And they did that and it makes sense. And I expect we'll see Google and Amazon soon follow. And if you can make your stock go up 30% by splitting it, I would do it twice,
I've been thinking a lot about the Tesla stock split over the last few weeks. I definitely underestimated the impact it would have. I didn't realize how much of a hoo-ha there would be about the fact that Tesla announced this split. Again, the split hasn't even happened and we've seen the stock run up a ton. So it isn't the investors who currently can't afford the stock who are actually buying it up. It's other people. But I think this stock split announcement has been part of a perfect storm. It's drawn a lot of attention or redrawn attention back to Tesla. Now people are looking at it with fresh eyes and starting to notice some of the potential that they were blind to previously. People again are starting to talk about the battery component, a little bit about autonomy. This is really positive. So maybe it wasn't the split announcement itself, but the fact that it drew enough attention through all the reporting in the finance media, etc., got a few more people interested in the company. Some people have taken a second look and now they're starting to see a little bit more of Tesla's future potential. Let me know your thoughts in the comments below, guys. Do you think the announcement of the Tesla stock split catalyzed the sea of people now looking at the stock and now buying, now realizing there's a little bit more to the story than they first thought? Or is it just a happy coincidence? Lead up to potential S&P 500 inclusion, great quarterly results, battery day coming up. What do you think? I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. And of course, don't forget your free stocks with WeBull. If you're in the US, you can start a new account with WeBull using my link below. Deposit $100, you'll get 2 free stocks, one of them valued up to $1,400. And if you're in Australia, New Zealand, or the UK, you can get a free stock using the link in the description to stake. Thanks so much for watching. Let me know your thoughts in the comments below. And of course, if you have any ideas for future videos, let me know. I read all your comments. PS, if you're still watching, you're awesome. If you'd like early access, exclusive videos, regular Q&As, our private Discord server and more, consider supporting the channel at patreon.com/solvingthemoneyproblem so I can keep creating content for you guys. There's a link in the description. You can now also become a member of the channel for some exclusive perks. To learn more, click the join button next to subscribe. And don't forget to check out our merch store. Either way, the best form of support is you being here and watching, so thanks again.